the news and data points then out of Europe as well. The market picture there has certainly been shifted and worked towards according to what happens out of that China trade war. So how exactly has that market performed? Well, today, negative territory, not necessarily the greatest market, having considered that China didn't necessarily do so well. Asia wasn't sitting in positive territory. A lot of that, of course, coming through from the fears of how things may fare. Japan's manufacturing sector also not seeing some great numbers there. A fourth straight month of decline as well in that PMI number for Asia. So certainly not as resilient as one would have hoped, perhaps signs of another recession there. And that has then filtered through into the European market. On the local front as well, the JSE All Share is down 0.7%, still above that 54,000 point mark. Of course, having hit 56,000, having hit 60,000 points as well. One would have hoped that that mark would stay, but not so. 69,000 then for the industrials after Tencent was sitting primarily flat out in Hong Kong as well earlier today. The financials picture, that's at 37,563 points. On to the resource counters then. It's been a bit of a mixed picture of late, and today continues to be the same sentiment. Resources on the whole are down, while the likes of gold shares, however, are headed a little bit higher up. If you consider the entire resource picture, Exxaro did come out with its interim earnings today, an uptick of 42% with regards to those earnings. So that certainly has faded quite well. Taking in those commodities pictures, the gold has hovered in and around that $1,500 a fine ounce mark. So certainly hovering in and around it. It has been difficult for it to stay there, having had some safe haven status not so long ago, which seem to be fading ever so slightly. Platinum still at $846, while oil just sits above that $60 a barrel mark. And in the local currency, of course, the worst month in a year then for the local currency, 15.20 now against the US dollar, getting some weakness, however, filtering through into trade, having been at around 15.25 earlier today. 18.45 then for a British pound, 16.83 as well for a euro. Let's unpack the market data and a whole lot of news then. Viv Govender does join us as well then from the Johannesburg Stock Exchange. That is coming through today. Viv, thank you so much for the time. Good afternoon to you. The market picture, yes, slightly negative today, but on the whole, would you say that it's really South African factors or primarily just the sell-off that we're seeing across the globe?
I think it's a global situation, and you can see that by the currency, which is not moving too much. If it's generally when you have a South African sensitive issue, you do find the currency, the rand, basically, being quite volatile. Right now, we can see that we're kind of following what global markets are doing, Asian and European markets, and the currency at the moment is reasonably stable. It's jumped up quite a bit yesterday, but today it's quite stable.
Yeah, that stability then in the local currency, however, is stable at the wrong place though. 15.20, we certainly would love it to be below that 15 Rand mark in order to help us with regards to the interest rates decision, having seen inflation come through at 4% yesterday. Surely that is bound to play some role in the decision made by the MPC.
It should. I mean, we have low inflation at the moment, 4%, less than expected. And the inflation target for the country at the moment is 4.5%. The range is 3 to 6%. So we're still not, close to the 3% level where basically they'd be forced to look at rate cuts, but we are now getting there. That being said, I think unfortunately due to some of those ratings cuts, fears that we have around the rand. The fact that the rand is weak at the moment, 15.20 when it was closer to 13.80 just a few weeks ago. Those factors actually are quite negative for the chances of a rate cut. And I think that the Reserve Bank is possibly going to look at holding things steady for now. But I mean, because the rate cut is justified if you look at the inflation and the growth rate just on their own. We're not looking at the dangers of things such as ratings, downgrades and so on.
Yeah, it's a bit of a weird one though, Viv. We have an inflation environment that, as you said, is benign, but the rand is the only issue at hand here, while the rest of the world seems to be headed towards that decline. Is it not perhaps a safer bet to cut in a time when South Africa perhaps does need it most and still be able to maintain its integrity as a reserve bank?
Yeah, the thing is that in a fair world, that would be the case. Unfortunately, we don't play in a fair world. And, South Africa doesn't play according to the same rules as a place like the US, for instance, or the Euro region. As a smaller country, as a country that has had issues with regards to ratings downgrades and so on, we are quite vulnerable to currency devaluations. And we're not necessarily to look at things like, for instance, Turkey, where disappointing the market with regards to ratings, expectations, resulted in a significant reduction in the value of the currency, forced the Reserve Bank to act much more aggressively than it would have otherwise. And unfortunately, we can't just say this is what should be happening. The logic dictates. We've got to work on the perceptions as well to a certain extent. And the Reserve Bank has to be slightly more cautious than I think would be justified, just because of the fact that we don't operate in a fair world. And if we do act in a way that the market doesn't quite expect, we would find quite a massive response coming to us in the form of our currency devaluation.
Yeah, I would certainly perhaps not necessarily like that picture. But if you concentrate on the equity front just a little bit, then Viv, the likes of Exxaro coming out with interim earnings, a 42% uptick in those interim earnings. That's a good number.
Well, yeah, they said that revenues are, volumes are up, but apparently the pricing is coming down a little bit. Look, this is a good number. They have a special dividend due to some asset sales, so that's a bit of positivity coming through. We've seen commodity prices recover to a certain extent over the last little while, and that's kind of helping the general commodity sector, even though, like I said, Exxaro says that pricing has been a bit under pressure at the moment.
Yeah. Would you say that there's a sustained ability to keep things going like this? I mean, the difficulty here is that the mining industry, much the same as all the others, continues to be strained. So do you think that that perhaps continues and the strain continues to be felt then on the mining industry? Can Exxaro make it beyond this?
It remains to be seen. I mean, the problem with these mining companies is that it's not so much what they are doing. A lot of the stuff in terms of their profitability, in terms of their prospects, etc., depend on two things: their resource, the ore body or whatever they are mining, and the commodity price that they are facing here. So if the ore body they're mining is cheap and the commodity price is high, they're going to make a profit. If it's not, they won't. And at the moment we are seeing quite a bit of volatility coming through in the commodity sector, and some of the companies have benefited, like the gold miners have benefited. But it all depends on what's happening out there in terms of the US-China trade deal, what international commodity prices are looking like, etc. The ore body, to a certain extent, unless there's a change in technology, is not really going to be affected. And the thing is as well, I mean, these mining companies operate pretty much close to the barrier of efficiency anyway. There's very few incompetent miners out there. They tend to be very close to efficient. They tend to be everyone tends to be doing a good job with what they have available in terms of the ore body and in terms of the market that they're facing.
Yeah. All right. Well, overall, the share price is up a touch today, 1.33%. So some good numbers coming through for that. Just the overall picture then as well, Viv, we have the central bank governors having a meeting as well. Then tomorrow, Jackson Hole, Wyoming will certainly be the focal point for that. Do you get the sense that there will still be a sense of cutting interest rates, that perhaps we do need to continue to boost the economy?
I think there will be. I think at the moment you can't find a single major central bank in the world that's not on that's still looking to basically raise rates. Rate hikes are off the table across the world. So it's cut a hold at the moment for most places. Should we see any kind of downturn from here, cutting becomes a lot more viable. Jerome Powell hasn't been as aggressive as the market wanted with regards to some of the statements he's made over the last few weeks. But I mean, he will also react to a downturn in economic growth by looking at a rate cut at the moment. And we are seeing clear indications that this trade war between the US and China, and to a certain extent between the US and the rest of the world, is hurting things. We are seeing, real downturn in terms of economic growth prospects for China. We are seeing even downturn in terms of growth for the US as well. And so these factors led me to believe that, the weak global economy will make it much more likely that we'll see more rate cuts. But at the moment, definitely nobody's looking to hike rates. So we could say that one of those three options are off the table. So it's either hold or cut at the moment.
Viv, truly appreciate chatting to you on this Thursday afternoon. Thank you so much for that. That market turning negative, as you said then. Viv Govender from Rand Swiss helping us unpack that market picture then live from the Johannesburg Stock Exchange.